Nilqakom lura l-programm Flusek, illum qed nitkellmu dwar ir-riżultati finanzjarji tal-Bank of Valletta għas-sena 2021 u magħna għandna il-Kap Eżekuttiv is-Sur Hunkin. Back to the questions. BOV reported an improvement from its insurance associate companies of 4 million compared to 2020. What were the main reasons for this improvement on that side of the business?
Jesmond, we touched earlier on how we've put a focus on investments. So as we've worked with more customers and clients, that's also had a knock-on impact through to MMSV in particular. We've worked very closely with them. We're trying to forge a stronger partnership as we can. And as our business volumes grew, so that helped MMSV. They were obviously also helped by the investment market and the kind of broader economy in itself. But that focus is driving a particular area that we want to continue growing.
Okay. We mentioned earlier customer deposits, which continue to grow in last year, as did loan and advances to customers. What does this indicate in your mind, and how is the bank dealing with both of them to counter the two?
So in loans, the lending side of the business, in both business and retail, we're doing a lot of work to try and make sure that our processes are as efficient as they can be. Certainly for the client, so that we can make the process simpler and easier. And in home loans, we're about to launch a new application internally that will mean clients will get faster decisions and better processing. This is some of the investment that we've been making. We've also simplified product ranges in the mortgage side, for example. Businesses, we've introduced a new consistent underwriting tool that will mean we can give better and more informed decisions for clients, again, hopefully in a quicker way. So the focus on growing lending will continue, and we hope to continue to see growth levels that we've seen last year and to continue even further in that vein. On the deposit side of the business, as we've talked about, it grew 900 million last year. Some of that growth came in the back end of the year and was also due to a few corporate clients placing quite significant deposits in the last quarter of the year, some of which rescinded. And we saw some signs of slowing in 2022, but it's kind of levelling off again. So we need to find ways of mitigating the deposit growth and the impact that it's having on the bank. So we are continuing to work with clients and to focus on letting them or making them more aware of alternative investment approaches. We're looking at the way in which our products are structured, and obviously depending on the economic situation, how interest rates pan out, we'll have to see. But deposit growth is something that we will continue to focus on, try to manage, not away, but certainly manage flat if we can do that.
All right. So you mentioned the growth in the loan book. Is the growth evenly balanced, even in light of growing competition and particularly on the home market, loan market? There's more competition because it's a big market.
There's definitely more competition, and that's good. That's healthy. It's also waking us up to make sure that we maintain a healthy offering to clients in the most simple way. We grew lending by about 330 million last year. 70% of that growth came from the home loan side of the business. So home loans, it's good to see that we are back in the marketplace, playing strongly, and with the changes that we're bringing about, I would expect us to make even further improvements in that space. On the business lending side, obviously in 2020 we saw a lot of COVID related lending through the MDB scheme as we supported corporate customers through difficult challenges, particularly from a cash flow perspective. But as we've gone through 2021, most of those clients have come off the moratoria where they didn't have to make repayments or have started funding their new loans, and it's pleasing to see that is very encouraging. But in the last quarter of 2021, we actually saw clients starting to borrow to invest, mainly in construction, tourism industries, etc. It's good to see that corporate customers are starting to borrow again to invest in the future post the COVID climate, and the resilience of Malta and the clients has been very strong.
Obviously, we mentioned the good performance and, as you explained, improving situation. But despite the improved results, the Board of Directors are not recommending the payment of a final dividend. What led to this decision, which obviously, from the shareholders' point of view, might not be so happy about?
No, and we can totally understand. It remains the board's intention to return to a sustainable dividend just as soon as we possibly can. We did make an interim dividend payment in January, but the board discussed long and hard this issue, and there are three key factors that are just holding the bank back from returning to, let's say, normal dividends. The first is the economic uncertainty. We've not just got the COVID situation still prevailing, but the geopolitical one more broadly creates uncertainty in the marketplace. And as we had to in 2020, we had to raise 80 million of extra provisions. The fear is that if we pay away in dividends and something like that reoccurs, we've lost the capital base that's necessary to support that. The second, undoubtedly, is the ongoing litigation situation. It remains very protracted. We've done everything we can as a bank, and obviously the Italian courts in first instance went against us, not as expected, but certainly not unexpected. And we need to get that closed out and closed off, because even though we don't believe it's a liability, you have to hold capital to protect against the contingent liability. So until that goes away, it's placing a very difficult strain on us having to hold extra capital reserves. And the third area is the need to continue investing and embedding in our transformation. You know, I talked about we've had to invest 23 million. A lot of that is in the regulatory side, the requirement side, driven by, as I say, Swift Payments want a new payment system in by September. These are things we cannot opt to do, we can't opt out of, and there is a lot of investment that we have to make to get ourselves or to keep ourselves current and to improve our systems going forward. So the board took those three factors into account and made the difficult decision not to pay a dividend at this time. I would say the more we capitalise our returns, so this year there'll be a stronger capitalisation with no dividend, that strengthens the underlying balance sheet. Now, that helps the bank in many ways. It helps us in terms of ratings, it helps us in terms of fundraising, and we may well have to raise funds in the next quarter or so because of something called MREL, which is a new regulatory requirement to raise sub-debt. So this is about sustainability for the long term. We totally understand that shareholders would welcome a dividend. As soon as we can return to that, the board will do so.
Very well. You mentioned obviously how you're investing. At what stage is the bank with its strategic plan, which was approved in 2020?
So we've made very good progress in a short space of time. And we work with one or two partners in this space, and they've complemented the bank on the progress that has been made. But when you look at the 23 million investment pot last year, a significant proportion of that was involved in implementing new AML systems, in meeting increasing regulatory requirements. We're having to invest in ESG now, and there's a whole load of regulatory requirements that go around ESG. We're having to invest in our data systems and our approaches, partly driven by us, partly driven by the regulators. But a significant proportion of that strategic investment is mandated. We don't have too many options. What we've managed to do is, concurrently with all of that investment, we've automated a number of our applications already, streamlined them. So in our investments process, we took 4 applications and turned it into 1. Now we're bedding that in and trying to make it simpler and easier for our customers to invest. We're about to go live with a new home loans process, which should make it an awful lot easier for customers and for our staff to serve. The pace at which we'd like to make those kind of customer-facing investments and to turn those into business efficiencies isn't as fast as we would like. And what I'm keen to do is to make sure we've addressed all of the mandatory issues, taken away any regulatory concerns, met all of the ongoing sustainability type issues, and advance then into the technology side that we really want to address as quick as we can.
So, obviously, the bank is still the largest bank in Malta. How is BOV continuing to uphold its social corporate responsibility towards the society?
It's been difficult in COVID. Obviously, many of the events and things that we might normally have run have been difficult. But that said, we have maintained investment in the arts, in heritage, in many aspects of our community support right throughout that period. In addition, I'd mentioned ESG, environment, social side. We've piloted a number of products that are there to help business and personal customers invest in energy efficient schemes in a way that helps them and incentivises them to move towards that approach. We are embarking on a whole environmental programme across the bank as part of which will be integrated into the strategy. Everything from us looking at becoming paperless, considering the environment and the way in which we work, and also understanding our clients and our clients' needs, how we can help them support the environment, and looking increasingly, as I've given an example of, at providing funding initiatives to support the businesses that we work with to go that way as well.
Thank you very much. I'm afraid we're out of time. Nirringrazzjakom tal-li kontu magħna, illum kellna magħna is-CEO tal-Bank of Valletta u miegħu iddiskutejna ir-reżultati finanzjarji għas-sena li għaddiet. Flusek ikun magħkom il-ġimgħa d-dieħla. Grazzi.